Hi, this is Dan Collins from the Dan Collins Report for Traders Exclusive. And this morning I want to talk to you a little bit about VIX, what it shows and what it doesn't show, and return drivers in the markets. A couple of weeks ago, I wrote about an interesting study put out by the folks at S&P Dow Jones Indexes, and it showed how spikes in VIX led to poor performance in commodities and commodity indexes. It was a very interesting study, but the one thing it seemed overcomplicated to me, because the bottom line of what it revealed is that ever since basically 2008 in the economic crisis, commodities markets have been highly correlated with the S&P 500. Why is that a problem? Well, people invest in commodity indexes because they fear inflation, but also as a hedge against their traditional portfolio, as a non-correlated asset class. So if they're highly correlated to the S&P 500, the long-only commodity indexes are not providing what they're supposed to provide. For that, you need to go to managed futures that can be long or short a basket of commodities and futures markets. That's very important. Now, it's very important because a lot of people believe that the S&P may be due for a correction this fall. October has always been a very volatile month, and many of the worst crashes have occurred in October. So if that's something that you fear, and long-only commodity indexes are still correlated to the S&P, you're not helping yourself. You need an investment in managed futures. Now, the S&Ps are doing well. Some people think equities will go to new highs. But remember, the VIX itself is at very depressed levels. Most rallies come from high levels of VIX, not at this low level. So while the equity markets could continue to be strong and go up slightly, there is a chance that they could correct significantly, and they're probably not going to fly up there. So if you're looking for a non-correlated investment, look to managed futures, a trend following program, because long-only commodity indexes, they may provide some strength if inflation does hit, but it's not going to provide non-correlation to the S&P. This has been Dan Collins from the Dan Collins Report. Talk to you soon.